Welcome out to the Blue Sky Trading Lab every Thursday, 4 p.m. Eastern Standard Time, right after the market, where we work on all things trading topics, strategies, techniques, you name it. We've been talking in the lab recently a little bit and really kind of in the stream with Riz and in the Power Hour, kind of talking about different forms of trading recently. And in our content at Blue Sky, guys, we're going to be talking more than just day trading. We're going to be and more than just day trading in the futures market. We're going to be talking stock. We're going to be talking swing trading, other forms of trading as well, because we certainly don't want to pigeonhole everybody into one style of trading. Because I think we can all agree there are a lot of ways to find financial success in the market. Can we all agree with that? There are more than 1 billion ways to find success in the financial world. And sometimes traders just got to find their timeline that really, really works for them. Now, I do have a question for everybody here as we get started. How well do you understand the mindset and the style of a swing trader? Who here, who here, who here does some swing trading out there? Scale it 0 to 10, RQ 7, 0 to 10. 0, you've never done it. 10, you're the wizard. Hey, yeah, there's my swing traders. Oh yeah. Now, swing trading is not too dissimilar to every other form of trading. It's highly technical, and I'll get into kind of that here in a minute, but it's an extremely technical. In fact, I would say swing trading, and I know this might be shocking to a bunch of cutthroat day traders, but I would actually say swing trading is even more technical than day trading is. I don't see anything outside of swing trading other than a technical environment. Technicals play the end all be all of all analysis in swing trading, in my estimation, is technical analysis. So, what I want to do here today, guys, is just have a beginner level conversation on swing trading. I want to go look at a couple stocks to talk about kind of how a swing trader would process them. I want to then take a look at the stocks that you guys are looking at. So, I got a little bit of a homework assignment for everybody here. I want everybody to find your favorite stock that you think would be a good trade over the next 7 to 10 days. Everybody find me one stock, one ETF, one asset, one something that you feel would be a great trade in the over the next week, 7 days. A swing trade is anything typically from 2 to 10 days. That's kind of the time frame element to it, is somewhere around 2 to 10 days. But a swing is really kind of your the entire process of it is you're trying to buy at support, sell at resistance. You're trying to sell at resistance, buy at the next level of support. There's a couple quantum stocks, Nacho, that are on my mind right now as a swing trader, quite frankly. And so we'll take a look at those. Now, guys, I want you to write those stocks down. And at the end of the lab here today, we're going to do something I love doing, and it's called rapid fire. And what I'm going to do, guys, is I'm going to take every one of your stocks. If there's 5, 10, 20, whatever it is, everybody can only put one, but I'm going to look at every one of your stocks and I'm going to go through a rapid fire technical take to tell you exactly, is this a swing trading environment? If so, where would the swing trader enter? Where would the swing trader put a stop loss? Where would the swing trader target? And I love doing rapid fire, guys. Absolutely love doing rapid fire because it forces you to just look at the analysis without going through a detailed assessment of, oh, let me second guess this and second guess that. We'll do that at the end here of today. So, the last 10 minutes of the lab, save it for team time because we're going to be doing rapid fire. And if you guys like rapid fire, guys, I will do it every single week in the trading lab. Bring your favorite stock, bring your favorite trade idea, and let's find those great trades because I kind of feel like if all of you guys have a favorite stock that you're looking at, I'm willing to bet we can find five or six that are really good for all of us. Would you guys agree with that, by the way? That's one of the reasons why I like doing rapid fire, guys, is so that all of us can get an understanding of, all right, here's the best five to six potential trades. Here's the best two to three trades. Here, these trades aren't. I think we can learn from it. I think we can also find some really good trades for the team. Now, let's take a step back though, because I know I got some cutthroat swing traders here, but for the most part, and I think we can all agree with it, very new to the concept of swing trading. Not new to the concept of trading, but very new to the concept of swing trading. And when you talk about swing trading, just in general, I want you to have an understanding of it, kind of like what the mindset is of the swing trader. The swing trader is a pinpoint, what I refer to as a market assassin. They don't lob grenades in the market. They don't say, "Oh, I think it's going to go to this zone." They are pinpoint in their entries, they're pinpoint in their stop loss placement, they're pinpoint in their targeting methodologies. Swing traders are the most consistent technicians in the market, and it is not a close second. Day traders will trade every technical pattern known to man. Day traders will trade every level known to man. Day traders will trade level to level, zone to zone. Swing traders are very pinpoint, and quite frankly, we're a lot more. Uranium is another one out there that I'm thinking too, Ace, on that pullback. Swing traders are very, very pinpoint on their technical execution. We are rules based traders. We use things like ATRs to help us understand entries and help us understand stop loss, to customize our orders to ensure that we're getting into the proper position. Order entry is going to be a little bit different for swing traders than it is for a lot of day traders who are a little bit, in my estimation, I feel like day traders are a little bit loose in their order entry. And would you agree with that, by the way? Day traders in general are a little bit loose in how they apply orders and stop losses and targeting, and they're a little bit zone. To me, swing traders are not that in any capacity. We use percentage of ATRs to create rules above structure. And so we don't use market orders ever as a swing trader, guys. Not unless we're entering in as a day trade with an expectation to turn it into a swing trade. We don't use market orders, guys. We use stop orders. We use limit orders. We use custom orders, buy stop limit orders. We use bracket orders. We bracket the entire trade setup because, once again, everything is based on technical analysis 100%. So we are technicians first. Charts are our foundation. Our philosophy is price is king, queen, and country. Price is absolutely everything. And we are also trend traders. We don't trade neutrality ever, 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 ever. We don't look at a support level and say, ooh, we got an edge at support to the next level of resistance. That's what we do in day trading because we trade the same instrument over and over and over again. That is not what we do in swing trading because we have 5,000 stocks that we can look for to find a trend. We always trade the trend. Period. End of sentence. If you do not have a trend, you do not have a trade. If you are not anticipating a breakout starting a trend, you do not have a trade. We trade the trend. Period. End of sentence. There is no second rule to that. You don't have a trend, you don't have a trade. That's how it is, which means we are also extremely patient and we are extremely disciplined in waiting to get our number. If we do not get our number, we don't have a trade. If it does not do exactly what I need it to do, we don't have a trade. We are very, very patient in allowing patterns to develop and come to the proper conclusion. And I kind of feel like if you guys master that concept of patience as a swing trader, it will make you an infinitely better day trader, in my estimation. And so those are kind of the core principles of a swing trader We're pinpointing our entry, stop loss, and targeting methodology. We are technicians first. We trade trends. And because of that, we have to be patient and disciplined in allowing these patterns to develop because as a day trader, you don't have to have patience necessarily. You can flip your time frame, flip the switch a little bit, see the environment a little bit differently, but you can't force the time to happen on the daily chart, which is where the structure of all of our trades develop. And so if you need a candle to develop on the daily chart, you can't just flip the time frame and that all of a sudden say, well, now I got the pattern, because you have to have a day go by to get the structure that you're waiting for. And sometimes that forces the patience on you. There is no doubt about that. Now, I want to take a look at the different types of traders to really kind of zone into the swing trader, to how they are a little bit different than the other traders out there, because I do think there's a tremendous amount of commonality between day and swing traders, and I do think there's a tremendous amount of commonality between swing and position traders, but there are some uniqueness to them as well. A day trader is simply getting in and out of the same time in this exact same 24-hour period. They're looking at intraday charts, they're trading different levels, different strategies, but it's all done on intraday timeframes. Swing traders don't do that. We will certainly look at the intraday chart when we're going in there to, find our pristine entry, find our pristine stop loss. But for the most part, we're doing a lot of the analysis on the daily chart. I'll talk about the time frame here in just one second. What a swing trader really focuses on, ladies and gentlemen, is they trade what's called pivot to pivot. I want everybody to write that into chat because it's very important. They trade pivot to pivot. That's what the intention of the swing trader is. Once again, everybody write that down. Pivot to pivot. We are constantly focusing on trading the pivot to pivot formations. And so when you're looking at the structure of a bullish uptrend, a pivot is a change in the market direction. Now, that happens quick on the intraday side of the equation. It does not happen quick on the daily side. It takes a little bit of time. You have made my day, Ace, in that quote, because Jesse Livermore is kind of my anchor on a lot of this. I find Jesse Livermore to be one of the greatest technicians of all time, if not one of the greatest traders of all time. And he was a amazing day trader, but you know what he was even better as? A swing trader. He was an amazing trader of every time frame, quite frankly. But that's a good call out. I appreciate that shout out there, Ace. Now, when you're looking at that pivot to pivot structure here, guys, the swing trader, let's say they're looking at the environment down here and they get their pivot point and they put their entry right here. Well, let's say the trend was coming down, like something along those lines, okay? And so trend's going up, trend's coming down, 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 down into support. This pullback on a daily chart will last 3 days, 7 days, 9 days, 13 days. You don't know the timing duration of this pullback, but as it starts to come into support, the swing trader looks for that pivot. And once the change in direction happens, this is where the swing trader's looking to get in. They're not looking to buy the low point here, guys. That's not the swing trader. The swing trader is not looking to buy that support bounce. They're looking to buy it after it confirms and you have that confirmation of a pivot. The swing trader will therefore put a stop loss underneath the pivot because the pivot to pivot action is everything that the swing trader wants to accomplish. And as the price goes up, 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 up here, the swing trader will take that stop loss and they will trail it up with the price action. So as the momentum shifts and the pivot occurs, they get stopped out as the pivot starts to change back in direction. The reason I bring that up is not to teach how to manage swing trades, guys. We'll talk about that here in a second. It's to understand the difference between swing and position traders. Swing traders will simply trade the pivot to the pivot. Swing traders will not short this move ever, 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 ever. That is not what a swing trader does. If you are looking to learn how to counter trend trade, you should not be a swing trader. Period. End of sentence. Be a day trader, be something else. Don't be a swing trader because you don't trade against the trend. Remember, one of the hallmarks of the swing trader is they always trade in the direction of the trend. They are patient in waiting for their setup. And if you're constantly saying, nope, I got to pivot, I got to short, you're not trading with the trend and you're showing absolutely zero patience, which means you're not a swing trader. And so when you look at this, you're just looking at profit taking environments here. This is not what short people are doing, guys. They're not. This is bull on bull crime. Bulls are driving the market up. Bulls are locking in profit down. So if you try to be a bear in a bull in bull moment, you're asking to get punched in the face from the trend. You trade in the direction of the trend. If you want to counter trend that, go be a day trader. You can trade that trend on the day on the intraday side of the equation, but don't hold that trade 3 to 4 days on the downside against a bullish uptrend when all the news is punching to the upside. And so the swing trader will be patient as they're waiting for this pullback, and then once they get their pivot again, the swing trader enters back in. Rinse and repeat as long as that trend is intact. Now, the difference between the position trader, ladies and gentlemen, is the position trader will look at the same thing. They'll have a very similar stop loss, but the position trader will not adjust the stop loss with the momentum of the trend. The position trader will trail the stop loss up with the pivots to capture the entire trend because that's what the position trader is attempting to do. They want to capture the totality of the trend. They don't want to just capture an individual leg of a trend. They want to capture the entirety of the trend, which means swing traders and position traders are extremely similar in how they see the technical environment. They are extremely similar in how they see the entry into a position or into a swing trade. They're extremely similar in how they initially assess the assessment of the stop loss. The difference is after the trade is put on, swing traders are more aggressive in management because the intention of the swing trader is simply to capture the move between a pivot and a pivot, whereas the position trader, once again, attempts to capture the entirety of the trend. Now, investors, they really don't focus as much on the technical side, obviously. They focus more on the longer term side of the equation, weekly charts, monthly charts, cash flow, dividend, covered calls, value, fundamentals, all of that play a big role in it. So that's not part of our conversation here today. And so when you're looking at the life cycle of a trend, which we have talked about a tremendous amount in this lab over time, I want to kind of take a look at the swing trader here. The swing trader looks at this resistance pivot against a developing situation, and they say, once it gets above resistance, we are giddy up and go. The swing trader simply tries to capture this move and adjust the stop loss as the move is going up, 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 up. The position trader does not do that. The position trader will adjust once it establishes a higher level of support. They will start adjusting that stop loss up here. Once again, the swing trader's intention, it doesn't always work out this way because you are going to miss things as a swing trader. I miss things all the time. Even when I have the best intentions in the history of mankind, I have a trade, it worked out, it set a higher high, and in the back of my mind, I'm like, all right, Matt, don't miss out on that next pullback. And every now and then I'll miss out on that next pullback because either one, other things become a bigger focus, or number two, it doesn't develop the way I want it to, or whatever the case might be. But the intention is important here. Our intention is we're going to catch this leg, we're going to catch the next leg, we're going to catch every single leg until that trend ends. That's the intention of the swing trader, is to trade the individual legs within the backdrop of the trend. So our intention is to trade breakouts and retracements. Those two core patterns within the backdrop of that bullish uptrend. It works very similar on the downside, guys. Obviously, we're looking at violations of support. We're looking at, pullbacks against that time frame. Now, as a day trader, everybody has their time frames they rely on to see the big picture, to see where your levels are, to see where your execution is. And I want to ask everybody that question here. Give me your number one time frame as a day trader. Everybody write down your number one time frame as a day trader. They are, AJ. It's very important, Ace. Five, okay. Now, 5 minute, 5 minute, 5 minute, 30 minute, 30. Okay. Your number one time frame, don't care what it is. Now, would you say that's your execution time frame? That number one time frame, right? That's kind of how I think about it. But is that the only time frame you rely on, though? Of course not, right? For me, I do a lot of my big picture on like the 4 hour and the 1 hour. The daily chart to me, MJ, is an epicenter of all analysis, so that's always a part of it. But specifically on the day trading side of it, I like to look at the big picture on the 1 hour time frame, on the 4 hour time frame to help me understand totality of trends, totality of pattern, totality of levels, kind of where the major patterns are, the major levels, the major trends. And then as you go down, you look for patterns, say on the 15-minute chart. You look for levels on the 15-minute chart. When you go down into your execution time frame, you're obviously on a lower time frame than that because you want to get in and get out and make those adjustments on the lower time frame, right? We all understand that. Do you think it's any dissimilar when we're swing trading? Like in your estimation, do you think it would be any different? It's really not. Now, should we look at a 5 minute chart as a swing trader though? Like ever? Ever? No. You don't care what happens on a 5 minute chart as a swing trader, guys. Okay. Just like an investor doesn't care what happens on a day in, day out basis. There's always those three time frames that we want to look for. Okay. There's always going to be those three time frames for every style of trader. And so whatever those time frames are, you have your main time frame, which is where you do all kind of the detailed assessment where you're doing a lot of your prep work is kind of your main time frame. That main time frame for a swing trader is the daily chart. So the main time frame, like on the intraday side, we have 29 people here. Could there legitimately be 29 different answers for their execution time frame for a day trader? Could there theoretically be that? Of course there could, right? Everybody's going to be a little bit unique on the intraday side. But as a swing trader, that is not the case. There are not unlimited amounts of time frames for a swing trader for you to anchor to. Every swing trader anchors to the daily chart. Every single swing trader anchors to the daily chart. The other time frames that are longer duration than that, weekly and monthly, are definitely in the purview of the swing trader because we want to understand the same concept of the day trader wants to understand the context of the hourly chart or the 4 hour time frame. As a swing trader who's anchoring on the daily chart, I still want to have the context of the bigger picture. I still want to understand the weekly chart. I still want to understand those major levels on the weekly and the monthly chart. My time frames are this, and I do think this is pretty, I don't want to say universal, but it's close. The main time frame for the swing trader is the daily chart. Okay, is the daily chart. The main time, the big picture horizon is the weekly chart. You got to have that context of the weekly chart. Good job, 30 people. Rebecca, get that contest ready. We are doing a giveaway at the end here. 30 people. Great job, team. You're the best. Love you guys. Awesome job. Now, the shorter duration could be a little bit different here. I know some swing traders that love the 4 hour time frame for their shorter duration. I know some swing traders that love the hourly chart. I know swing traders that love the 30-minute chart. Underneath that, I don't think you're doing a lot. Okay. And so whatever that time frame is, mine is the hourly chart. I anchor a lot on the hourly chart. And so the hourly chart is kind of my bigger picture horizon for day trading. The hourly chart is kind of my lowest time frame for swing trading. And so I like to mix those two time frames for me because I got great context for as a day trader on the hourly chart, and I also understand the context of that hourly chart on for swing trading as well. So for me, I like looking at the daily chart for my main end all be all time frame. All prep work is done. You can do some on the intraday, but you can easily do it on the daily chart as well. Bigger picture, weekly chart, shorter time frame to talk about trailing stop losses, to talk about maximizing entry, to talk about the initial placement of a stop loss. I would say the 1 hour time frame. But once again, the daily time frame is the epicenter of all swing trades. Now, this slide here, guys, is a very good slide to understand these time frames of traders and the types of time frames that they look at. And so day traders, big picture, they want to understand the daily chart, but when they do their setups and their triggers and their profit target and the trade management, all of that is done on intraday time frames. Swing traders, context, big picture, weekly chart, setups done on the daily chart, triggers done on the daily or the intraday, targeting is always done on the daily chart, trade management, initial stop loss, trailing of of that will be done on the daily or the intraday time frame. Position traders, they look at weekly, monthly time frames for big picture horizon. Trade setups are done on daily and weekly time frames. Triggers are done on daily and weekly time frames. Profit targets done on daily and weekly. Profit management is done on daily and weekly. The longer duration you're holding, the longer duration of the chart you're obviously looking at. But in your zone here, the swing trader, context, big picture, weekly, so on and so forth. Now, within the construct of trade with the trend for the swing trader, because that is an extremely important rule, guys. We trade in the direction of the trend. That is the number two rule of trading for all traders. Trade in the direction of the trend. Your money does not move the market. You have to accept that. You do not create the market. The market is much, much, much bigger than that. You have to understand these patterns because the market is giving you the edges based on what these patterns are telling you. And so the three core patterns that we trade within the backdrop of that trend do not change. They are very structured for us. We trade breakouts. There can be different patterns going into a breakout, but we trade breakouts. We don't trade the overextension. That is a management. That is a profit-taking management decision for us. We need to understand that so that we can start understanding when to aggressively trail stop losses, when we aggressively or when we want to scale out of a position. And so the overextension is really kind of a management type pattern for us. And then we absolutely love pullbacks. There's no doubt about that. Who doesn't love buying a dip on the daily chart? Everybody I've ever met loves buying a dip on the daily chart. We call that a bullish retracement or a bearish retracement. These core patterns, they navigate themselves over and over and over again. And so, as many of you have seen this slide before, but once again, as a swing trader, once it breaks out, we are ready to giddy up and go, period, and a sentence. As that goes overextended and the candles start showing us a little bit of an exhaustion, we get aggressive on the management. We don't sit there and say, well, maybe it's just a, slowing momentum candle at the top end of a chart at our trigger. No, we start aggressively trailing that stop loss. We start scaling out as it gets into our targeting. We don't wait for the market to come back down to tell us because all we're trying to do is capture the majority of this move. That's it. That's what we're trying to capture here. And assume each one of these candles is a daily candle, guys. We're just trying to capture that move. And as the market is coming back down, our patience is required here because you might want to short this. Well, you don't want to short this if it's just a flag-based pattern to the rising 9 EMA. I think you're asking to get punched in the face, which might actually feel better if Mike Tyson did punch you in the face than going against a very strong momentum-based trend. And that's what I want to talk about next because it plays a big role in how I see the quality of a potential swing trade, the momentum in a trend. Momentum is probably, in my estimation, the most important concept that you can master as a trader, whether you're day trading or whether you're swing trading. Having an understanding of where momentum is, where momentum lives, where momentum ceases is very, very important. And we can see momentum through a variety of different sources, not just one. But when you're talking about swing trading, the type of momentum I'm talking about is trend momentum because momentum is a very important part of this puzzle. I want to trade with the trend, but I really want to trade with the momentum. To read momentum in trends, does anybody has anybody ever done that? Reading momentum on that daily chart? Has anybody ever found themselves trying to understand it a little bit more detailed? I do trust both flags, Ace, with the tight stop loss. Let me put it like that, Ace. My bull flags have a very tight stop loss because it's the first part of the retracement, Ace. Retracements have three levels, three zones that they can come down into for the swing trader. And so the first one is the momentum zone, and that's the bull flags, that's the high bases. Swing traders will be very aggressive in entries. They'll be very aggressive in stop losses at those with those types of patterns, because we know the very second it comes underneath that, you're going to the next level in the retracement, and I call that the depth of the retracement. The bull flag is the first level in that. I just think you're very aggressive in your entries, and you're equally as aggressive in your stop loss. But when you're reading momentum, guys, there's a couple things that I like to look at when I'm trying to understand the momentum of a trend. The first way that you can assess momentum is, for example, when it breaks out, how far does it run before it hesitates? And as you can see here, breaks out, runs 3 points before it hesitates and forms a secondary pattern. Breaks out right here, breaks out, runs 8 points. That's a sign of momentum. Now, what does momentum have a tendency to do, ladies and gentlemen? Yeah, the scalping mindset will kill the swing trader if you're not a dedicated swing trader. You're making way too many quick decisions. Momentum has a tendency to create more momentum. See, you guys want to say it's supposed to stall because you keep thinking that you should have bought down here and you keep thinking you should have bought there. But as a swing trader, you can't go back in the past and say what you should have done. You got to read momentum for what it is today. And if this momentum is alive and well, momentum lasts until it doesn't, guys. That's how it does. It lasts until it doesn't. You do not second guess momentum in the market. You never say something's too high in the market. That's not what you say. You might be calling for a pullback. You might be calling for some consolidation and a pattern to develop. But when the trend has momentum, you're thinking about that next trade up here. When the trend has momentum is the key point here. When the trend has momentum, the likelihood of the next pattern going up is very high. It doesn't mean it goes up with the exact same momentum, guys. That's not what I'm saying. I'm saying that the next move should be bullish because the momentum is there. Does that make sense, everybody? Whereas when you see a loss of momentum, you start to think reversal. You start to think the end of the trend. And so as you see momentum go, the next move is a slowing momentum, but it's still up. And that's the point on momentum. It doesn't have to always move at the direction and the speed of the exact same momentum, but it certainly does move in the same direction. As you start to see it slow down, goes up 4 points, goes up 2 points, goes up 50 cents. At that point, you're like, oh man, that's a reversal starting to brew, and you see that get exhausted. Markets are going to test, test, test until that shifts. And once that momentum shifts, you see the support give, and then obviously things start to slow down, start to speed up on the downside. And so I'm constantly trying to read momentum to have an understanding of who has it. Do the Bulls have it or do the Bears have it? That's really the only thing I'm trying to understand. Are the Bulls increasing momentum? Or are the Bulls decreasing momentum? Are the Bears? Do the Bears have momentum? Do the Bears have decreasing momentum? Same thing on the downside, guys. Swing traders trade those three core patterns. They short when we violate support. They buy back their position as it gets into the next level of support, and they will look to rinse and repeat on the exact same thing the next time we pull back into resistance with confirmation, constantly looking to do the same thing over and over again. And when you're looking at momentum, momentum does go faster on the bear side of the equation, but you look at it through the same lens. You look at the first violation of support. How far did the market go down to where it found the next level of support? Went 3 points, went 5 points, went 7 points. Again, that structure has a very high probability of continuing to move in the direction of that structure until an object appears, and that is slowing momentum. And so when you understand momentum, guys, in the market, momentum works the exact same way Isaac Newton talked about momentum hundreds of years ago. Momentum has a tendency to continue in the direction of the motion until an object appears to stop the motion. When you have momentum in trend, that trend has a very high probability of continuing to move in the direction of the prevailing trend. You're not suggesting it's going to move at the same momentum. You're suggesting it's going to move in the same direction. Does that make sense, guys? The difference in it? Because sometimes when you look at momentum, you're like, are you saying it's going to be nine next time and 12 the next? No, that's not what I'm saying. I'm saying the next time we pivot, it has a very high probability of establishing another lower high, lower low, and the continuation of the trend is going to continue until we do see some slowing momentum. And when we do see slowing momentum, that's when we swing traders do what? When we start to identify slowing momentum and trend, once again, it's very important to trade with the trend. So as a swing trader sees increasing momentum, I have a lot of confidence in patterns, guys. As a swing trader sees a pattern development, I'm like, yep, that's a great pattern. We'll take a look at the targeting mechanism of where that momentum can go to, but I have great confidence. But when I see slowing momentum in trend, that tells me something because other traders are seeing the same thing, and that puts it on prime for the end of the trend. It doesn't mean it's going to reverse immediately. It just means that we're probably coming to a conclusion to the previous trend. And so the momentum goes to the the survivability and the continuation of that trend. Slowing momentum goes to the indication that we are seeing a conclusion to the trend. With increasing momentum, I want to have great confidence in my patterns that I'm looking at. When I see slowing momentum, I tap on the brakes. I want to see more development. And so I'm constantly reading that momentum to help me understand that. Now, let's go into the market and let's talk a little bit about this just very quickly. Now, one thing to keep in mind, right this very second, we're in the second week of earnings season, and the current market trend is what? Yes, I talked about it in momentum terms there, Ace, but to an Elliott wave technician, you can certainly see the Elliott wave influence on that momentum. Would you agree with that? Yeah. So yes, I am heavily influenced on the momentum side of it through Elliott wave theory. Yes. Okay. The short-term trends. What is the short-term trend? Just bull bear or neutral? What do you guys think? Everybody's got to guess. Bull, bear, or neutral? Short-term trend. It is not bullish. It's not. To have a short-term trend, you have to have a higher high, higher low. You have to have that. There cannot be any other scenario. And the last higher high was right, or higher low was right here. The next higher low was right there. If that decreases, you don't have a bullish uptrend if you decrease support to the downside, guys. This is neutral, which means everything recently has done inside neutrality. Everything is. You do not have a tailwind in the market right now. You don't have a headwind. You don't have a tailwind. Market is neutral right now. But does that make sense now, guys, that you kind of see it here? You have to have a higher high, higher low to create a bullish uptrend. So if this is support, and it is 3 bars down with a pivot, that is the definition of support. That is a lower level of support. That can't be a bullish uptrend. Now, in the longer time, okay, that's what we did on the daily chart. In the longer trend, is the longer trend still bullish? Of course it is. Of course it is. It's a bullish uptrend with a high base pattern kissing up against the resistance level. The bullish, yes, the weekly chart is bullish. The daily chart is not. Now, what does that tell you as a swing trader? Have I been doing more swing trades lately or less swing trades lately? Much less. Much less. Much less. Now, we're also in the heart of earnings season. And as a swing trader, let's say you're looking at, let's go with Apple. Okay. Apple reports earnings right here. They report next week. Am I willing to take a swing trade on Apple in front of that earnings? Yes or no? Absolutely not. You're asking to die. You're asking to get punched in the face and get told a very valuable lesson. Swing traders do not hold through earnings. Think about it. How important is technical analysis to the swing trader? It's the end all be all of everything. It's everything. There is no second discussion here. Earnings is not a technical event. Earnings is a volatility event. Earnings could care less about your edge. Earnings could care less about your resistance level. Earnings could care less about your opinion. I could care less what anybody tells me. If you guys have a very strong opinion on what Apple's going to do on earnings, you're wrong. And I'm not shy about saying that. I cover more earnings than everybody here combined. I'm telling you, you have zero clue what is going to transpire on that earnings. Zero. RQ, you know where I'm at here. You have zero clue. It doesn't mean it won't go up. It doesn't mean it's not going to have a great earnings. But do you know if institutions have decided in front of Apple's earnings that they're going to dump on the liquidity event? Do you know that? You have no clue. No clue. How many times have you guys seen an amazing earnings report, but it went down? Or how many times have you seen an amazing earnings report and it went up? Because earnings isn't about whether they make money or not. It has nothing to do with their revenue handle. It has nothing to do with anything other than expectation versus actual numbers and how the market interprets those expectations versus accurate numbers. That's it. The reason I bring that up is the swing trader who's highly technical, they can't determine what's going to happen on this. It throws off the probability. And so during earnings season specifically, and that's my general point here, guys, is the swing trader kind of pulls back a little bit until they get through the reporting season. And then we kind of come back in after that. Does that make sense, guys? Intel, tip, Intel. Is that what you're thinking? Intel, Ford, those are two reporting tonight. Yeah, I thought it was one of those two. Those were the two big ones. I have not seen Ford's impact yet. Um, I'm very interested to see Ford because they should be going up. And I say that because of GM. And yeah, they're going up. Not surprised. GM had a wonderful earnings report last week. They get seen through a very similar lens. And this is a good example here because Ford's going to basically be right around there when we open tomorrow, about 1280. Ford's going to be dancing this number tomorrow, guys. Now, if Ford gaps up tomorrow to that level of resistance, am I going to show a little bit of interest here? I will, but only if I develop here. This is a good level. This is a good level, but it would have to develop. I just wanted to bring that up. Coming back to the ES here, there's two things going on right now for the swing trader. The swing, yeah, I not only that, Hammy, I would say wait for two high inside bars going into that breakout. You don't just chase the earnings. You want to see that really kind of give a good 24 to 48 hours in my estimation. But coming back to the ES, the swing trader in me is not doing a lot of swing trading right now. The swing trader in me is waiting for two things, and then I'm going to pounce. Number one, what is the number one thing I'm waiting for as a swing trader in the broad market? What is the number one thing? I'm waiting on a breakout. That's it. I'm waiting on a breakout. I need the short term trend to be bullish. I'm just waiting on a breakout, guys. That's it. Could we break tomorrow? Yeah. Could we break early next week? Could we break late? Yeah, we could break. The market is in a position to break here. Doesn't mean it's going to. That's why we're waiting on that breakout. We're waiting on a catalyst. We're waiting on the breakout. But once the market breaks out, could you say that at that point you now have a short term bullish uptrend? The very second it breaks out. Whether you're right or wrong in the future, that's a different conversation. But I would say that market is now a bullish trend because you have the first starting point. And then the second thing is during earnings season, you get 85% of all companies reporting earnings in about a 4 week time period. And so about once a quarter, the swing trader just gets a little bit hesitation due to earnings. And so we're just in that environment right now. And so it's just a little bit of patience here. But I kind of feel like this is calm before the storm type scenarios. I just wanted to bring that up on the marketplace. Now, as a swing trader, do I need the market to be rip roaring bullish for me to be a swing trader on an individual stock? Of course not. But it just becomes a lot easier when the market is trending. Does that make sense, guys? Like there's always swing trades to be had in the market. Always. Every day there's a potential swing trade in the market. But when it gets, you always got to think about when it gets easy versus when it's hard. Swing trading right now is hard because the short-term trend's neutral. When it becomes easy is when the market becomes a little bit more bullish. Yes, Ace, that's kind of what I'm talking about. Now, a couple stocks that I'm currently looking at, I just want to kind of show you the process for how I would kind of look at those. Now, Newmont Mining is one of the gold stocks that I do a lot of trading on. I invest in GDX, I invest in a couple gold stocks, but Newmont Mining is one I actively trade. And Newmont Mining is in what type of trend here? Bullish, bearish, or neutral? It's a bullish uptrend. Now, what pattern are we here? This is a pullback. It's bullish because this is not a pivot here, Link. This is not a pivot here. The pivots in gold go all the way back, brother. Uh, Gold's been on a massive freight train, like massive freight train, massive freight train. It's been a good ride. It's been a really good ride, guys. Um, Yeah, it could entertain that. It could, maybe. That's not how I see it yet, there, Ace, but it certainly could. I am very open to that, but I'm also open to this trend continuing. Does that make sense? Like I am open to this trend continuing here. And as a swing trader, you're looking at a higher low. Again, the last true level of support, guys, is all the way down here. Like that's the last true level of support here in the market. And so we're obviously dealing with volatility here. But as a swing trader here, I'm just looking at getting into the entry above the high of the day. I'm looking to target my first target right there. My second target is up around the 105 level. And so my entry will be, let me kind of scroll down here. And so I'm going to look at this candle. I'm looking at that 9 EMA here because I don't like going against the 9 EMA. And I would put an entry right above the high of the day here. Now, if I'm going to put an entry right above the high of the day, when will this order go into the market tomorrow? There was your key point. It goes into the market tomorrow. So, do I want to use a market order here? Yes or no? No. You do not use market orders as a swing trader because you're constantly customizing where you're getting in at. You're constantly going to customize where you're going to put a stop loss at. You do not use market orders or you're asking to get your teeth kicked in. Period. End of sentence. The market will see those market orders overnight. They'll be like, okay, let's teach you a lesson. Go trigger that dude in, smoke it to the downside. Let's go. It's just not a good look because you want to control as much as you can. You want to control your entry in, you want to control your entry out. And so what we use when we're putting in orders on the overnight action on something like this, what would be called a buy stop limit order. Who here has never, ever, ever, ever used a buy stop limit order? Ranger? I use stops too, Ace, in day trading. I don't use a tremendous amount of market orders in general. So I'm assessing here. The only person who has never used a buy stop limit order is Ranger. Is that an accurate read here? Everybody else are really, really, really good at using buy stop limit orders. So I don't need to showcase anything. Okay, good. I figured as much. I figured as much. A buy stop limit order, guys, is simply an order. You can kind of see it here, buy custom, OCO bracket. The OCO stands for one cancels other. This is a very good order entry for swing traders, guys. What an OCO bracket order does is it stands for one cancels the other. And so it allows you to put your entry order in, it allows you to put your stop loss order in, and it allows you to put your target order in simultaneously in the same transaction. And so what I do when I'm swing trading and I'm customizing these orders is I just go to buy custom, OCO bracket. That's going to pull up the orders right here. And so on the order entry, and everybody's going to like Ninja's going to be a little bit different. Obviously I trade with Thinkorswim. They're a little bit different, but they should have OCO bracket orders. I'm pretty sure Ninja does. Um, is that what it is, Hammy? Yeah, I thought they did. Most brokers do. And if your broker doesn't, guys, get a different brokerage. Like just do. If they don't have custom orders, they're there for another reason. So when I'm putting the order in, guys, the first thing I do is I want to put my entry into the marketplace. Now, I don't have time today to teach the set method on swing trading, but I want to ask you guys a question. Have you enjoyed the conversation so far today? Do you want to do a set method application order entry next Thursday on swing trading? Because I'm more than willing to carry this conversation into next Thursday too. Because this will probably be a 3 week conversation. Let's just be real, guys. So let's just say swing trading 101 for the next 3 weeks. That's what we're doing. Swing trading 101 for the next 3 weeks. And you guys go tell somebody to come over here to BluSky, join our Discord so that they can learn how to do this too. Is everybody good? Okay. So we are going to pick up where we left off today next week. I just want to show you how it works. Next week, I will teach it in more detail. Okay. I just want to kind of show you how it works right now. And so on the entry here, and I'll come back out so we can look at it. Now, one point that we need to understand on order entry here. You want to make sure that you apply orders universally. And what I mean by that is you can't say I'm going to just put the order above the high of the day on every single stock. You got to use something to customize the volatility. And so what we do as a swing trader to help us understand our where to put orders is we use an indicator called ATR. Now, how many of you are not familiar with the ATR? Who here is not familiar? How many of you are? It's a pretty simple indicator. It stands for average true range is what it stands for. It's a really good indicator to help us understand where to put orders. So think about it like this, Theo Wealth. Theo, does $1 represent the exact same thing on every stock? Oh yeah, ATR, one ATR targets, one ATR stop losses. Oh yeah, they are magnets. Does $1 mean the same on every stock? Yes or no? No, it does not. $1 to a $10 stock represents 10%. $1 to a $1,000 stock reps 0.01%. They don't mean the same thing. You want, as a swing trader, you want to have concrete rules for entry, concrete rules for stop loss, concrete rules for targeting. This entry rule for me is 5% of the ATR above the high. What the ATR does, it allows us to customize to fit the order for the volatility of the stock itself. And so 5% of, and you can see the ATR right here, $4.20. $5 of 5% of $4.20 is 21 cents. And so I'm going to put an order 21 cents above the high. I want to give that a little bit of flexibility because, guys, you're not day trading where you're just getting in above the high. You're swing trading where you want to see the close and you want to see confirmation and you want to see a little bit of room. And so I'm going to, oh, I do. I do for entry and I do for stop too. The only thing I don't use it for, Ace, is targeting. Like I don't use ATRs to target. I do know other people, like a lot of swing traders will put a one ATR or a two ATR target, and I don't have any problem with that. Like it's perfectly fine. I just use something differently. Um, okay. I don't use like a one ATR stop loss, Ace. No. I identify where I want to place my stop loss, and then I use a percentage of the ATR under that level. And so I actually identify where I want to put a stop loss on the daily or the intraday chart. And then I use the ATR to customize how far underneath that level. Does that make sense, Ace? So for example, here let's kind of scroll in there. Let's say I wanted to get this pivot down here, right? Let's say it's pretty far, but let's say I wanted to get that pivot down there. Well, I would identify the number 8237, for example, and I would say, let me put the stop loss 25% of the ATR underneath that level. And so I don't use a percentage of the ATR from the entry because I do think that will be too tight. I'm right there with you. I want to use the ATR to customize the rule because every time I place a stop loss, I want to use the same rule. Every time I use an entry, I want to use the same rule. Does that make sense, Ace? I just want to be systematic in that approach. And so a lot of times I'll just look at the intraday time frame to try to find that edge on the intraday. And I'd say, okay, here, it's going to be a little bit different. We just had earnings, but I would like to, yeah, but the point remains, I would want to use that ATR. Now, targeting wise, a little bit different. I'll save that conversation for tomorrow. So once again, coming down to the order here, to put a buy stop limit, you see how it says limit? I'm going to go to buy stop limit. That allows me to put two orders in to ensure that because I'm putting the order in tonight. I don't know if it's going to gap up tomorrow. I don't know if it's going to gap down tomorrow. I don't know what the futures are going to do. And so if I'm just that swing trader who checks on this day in, day out, meaning I got a job, I got life, I got a lot of things, I got lots of responsibility, I check the market at night. I work with a lot of traders, guys, who only put trades in at night, swing trades. And to do that, you have to use those custom ATRs. You're good, Mr. Positive. Now, I could go on this another 2 hours, guys. That's why we're going to do another couple sessions on it. So I apologize for not bringing this to the proper conclusion. We will pick this up next week. But before we do that, I want to do two things. I want to do rapid fire and I want to do a giveaway. We're going to do the giveaway first, then we're going to take a moment to look at your stocks from a rapid fire perspective. So, Rebecca, let's do a giveaway. All right, guys, you know how the giveaways do it. Hit that link. Do I need to create oh, there's no secret now? There's no secret? Oh, there's no secret. I was so going to use. All right, no secret. Giveaway, guys. Giveaway. Giveaway. Click the link, put your entry in, and Rebecca will be calling the winner out. Rebecca, when are you going to be announcing the winner? Just it was going to be Swing RQ. I was not going to be too creative today. 5 minutes? Good. That's perfect timing. All right, guys. Now we're going to rapid fire, meaning I am going to look at these stocks that you have, these stocks, ETFs, commodities, whatever you guys got. I'm looking at it from a pure swing trader's mentality. Give me your stocks. Are you talking gold or are you talking Barrick gold? Because Barrick gold is minor, or are you talking slash GC? I thought it was slash GC. As a swing trader, I don't love the current setup here, RQ. And the reason being is this big old candle right there. You just haven't got enough time yet to really kind of work that out. And so the swing trader in me would actually like to see a little bit more time here to get away from this candle. And so the way I see gold right this very second is I still see it through a pure intraday lens right now. I don't think we've gotten enough away from that volatility from a couple days ago to truly understand, kind of the probable edge here. And so for me, I still see it through the intraday lens. I like it right here currently. I do like it right here. And this is the level I'm tracking going into tonight is this kind of shelf right here at the 73, 74, 75 level. Listen, I want that swing mindset too. I do. I will tell you kind of where my head goes in gold when gold gets into a decent swing trade setup is I kind of come over to GDX and I say, okay, where's the current development here? And I would love to see a reversal pattern here on GDX, kind of like into that level. That's what I would love to see here. And that would just allow that 9 EMA. I never go against the 9 EMA RQ on the daily chart. Like I just don't. Like, I don't think it's wise. I don't think you're going to be a successful trader long term if you do that. The 9 EMA on the daily chart, in my estimation, is the number one momentum indicator in the entire marketplace. The vast majority of algorithms use it. And so to me, I'd just like to see a little bit of consolidation here first, allow that 9 EMA to get underneath. And then when it breaks back up, that to me is a really good swing trade. And so I kind of hope a Newmont file kind of goes along that same path. Because right now, like if gold miners just kind of go like this, I'll miss that trade, to be perfectly blunt with you. I need to see development here for me to really process that swing trade. Now on GC, like you could see it a little bit better on GC, but you got an M formation here, you got a reversal formation here. So I got a bearish reversal, I got a bullish reversal, kind of mixed. That's why I still see it through the day traders lens, not necessarily the swing traders. And when you come over to the GLD, you'll kind of see what I'm talking about. Now coming down here, I mean, that's not too bad there. I think you could structure right above the high here with the stop loss underneath the 370 level and basically take this 12 points of risk here. I do think you could structure that one. Silver, on the other hand, will need one more day in that because the 9 EMA still above. 9 EMA needs to converge, and then I think you can do the same thing. I think GLD is in a little bit of a better setup for a potential swing trade, given the fact that you're not fighting the 9 there. So I could see it on gold. Silver needs one more day in my estimation. I would like overall better development. And the only reason I say that, RQ, is the volatility recently. Like, that's the only reason I say that at all. UPRO. Yes, I will take a look at UPRO. If you guys got a stock you want me to break down, let me know. Man, you guys just ultra pro shares, S&P 500, same conversation as the ES. Wouldn't touch it until it breaks out. Period. End sentence. Cava. Let's take a look at Cava here. Cava Group. Cava Group here. What's the current trend in Cava tipped? I got the current trend as neutral, which means you would be looking for this to, I see it through a K trade lens. K trade is where you have an equal opinion on the top side as you do as the downside. And right here, you got base neutrality here, lots of slowing momentum right here. So big downward drop, smaller downward drop, loss of momentum, works right back up into resistance. And so I probably like it a little bit on the on a little bit more on the bull side, but I would only be playing that pocket. I don't love it, to be perfectly honest with you. I think it's a little bit more neutral, and I certainly could be convinced on some earning strategy, but direction I think it's a tall ask to do something amazing in front of that earnings, honestly, on Cabot Group. CRM, yeah, a little Mark Benioff action here. I'll tell you on CRM, I think the only thing you're waiting for here, and I think this is a really good one, really good example, Gabber, is you see how you got your break here. You officially set that higher level. The only thing I would suggest here is we're tracking the pullback and one more day down, kiss off that 9 EMA, doji, upward movement in price. That would be a real good range there in my estimation. And so another day down, kind of get into this 252 level right there. And then let's see a doji here. Let's see a doji there. So you're kind of 2 days into the pullback here. Most pullbacks usually go 3 to 5. You'd like to see that come to a proper conclusion. One more down day, doji, upward movement in price would look really good as a swing trade. And that's the first time I've said something positive about a swing trade on CRM in years. A little surprised, honestly, because CRM, I used to really, really like this company, but then it just became, it has not been a great tradable company in my estimation. But you got a real good foundation on the weekly chart here. You got a daily reversal pattern that is happening right there. And now all you're looking at is the pullback coming down to that rising 9. This is one of those situations, Gabber, where I would just, I call it give me a doji, but all I would like to see here is this type of move here. One more day down, and then you kind of doji-esque here. And then the path, the beautiful path would be that 9 EMA kind of structure, that support right there. And then you get that upward movement in price. And that's the confirmation right there. And so, one thing that we need to work on is how to evaluate the development of a pivot because swing traders are trading the pivot to pivot ranges. Everything's a range in the market. The pivot to pivot ranges are what we call potential average yield. They're part of pay ranges. There's other ranges out there. I think that would be a good conversation in general, but that's the kind of structure you would be looking at here. Oh my goodness, we got Mr. Positive. Mr. Positive's been positive all day long, and look at it pays off as Mr. Positive wins the giveaway. Let's all show some love to Mr. Positive, please. We all cheer on our team, ladies and gentlemen. Even when we don't win, we are happy for our team that does. Or karma will happen and you'll never win a giveaway. That's how karma works, guys. That is how karma does work. Now, by the time we talk next week on this same conversation, we're going to be in a little bit better of a swing trading environment, in my opinion. And as we conclude our swing trading conversation in 2 weeks from now, we'll be even in a better swing trading environment, in my opinion. That usually works out as we get through earnings season. Yeah, all you have to do is enter the giveaway today. That was it, I think. Yeah. Dave, yeah, I'll take a look at Dave. Dave. Of course, I'll take a look at Dave. DAVE. Kind of mid-tier little breakout situation here brewing. Weekly chart's going to be base consolidation. The swing trader would take this above 245 and they would drive it to that 286 in front of earnings. That's what the intention would be. Two high inside bars here, Hammy would look really, really, really good. High inside, guys, for those of you who don't know what high inside means, it just means the market just it be after a real big candle coming into a real big resistance level, you just want to see that get slightly dialed in. Just high inside means couple candles tight inside. High inside means towards the top end of the candle. Inside means inside the body. That cleans that up. And the reason you say that is not because of the entering. The reason you like that hammy is because you get to put a stop loss tighter to the entry. So right now, the stop loss placement on this, you'd have to look at it from an intraday perspective and say, okay, I got this previous resistance level right there. I could use a stop loss right there. But the real stop loss placement is underneath the pivot point, and that's at 210. That's a big risk there, Hammy. You know what I mean? Couple high inside bars here, all of a sudden you got that stop loss, much more structured around the 230 level. And that way you can really justify it into the target of 286. You can't justify that degree of risk for that degree of return. High inside tightens up that stop loss, tightens up that 9 EMA, gives you a much better structure of a trade going into that. That's how I would approach it. That's how I would approach it. Team, I had a tremendous amount of fun here today. Did you guys enjoy the lab today? We went a little overtime. I apologize for that. All right. Next week, we're going to do application swing trades. So I want you guys to bring what you would find a great swing trade. I'm going to bring a few great swing trades. And we're going to just prep those trades, talking about where the logical entries would be, where the stop losses would be, where the target would be. And we're going to teach through application. You guys are the best. Becky, thank you so much. You're amazing as well. Team, you have a wonderful, wonderful rest of your night. And if you need anything from Coach Matt, hit me up in Discord. Outside of that, I'll see you later. Later, team.